program Spotlight, now we bring you a discussion on Economic Survey 2023-24. The participants are SP Sharma, Economic Analyst, and Lalima Aneja Dang, Anchor.
Finance Minister Nirmala Sitharaman tabled the Economic Survey 2023-24 in Parliament today on the first day of the budget session. The Economic Survey says that the Indian economy is resilient and has seen strong recovery post the pandemic. Well, for more on this, we are now joined by Chief Economist Dr. S.P. Sharma. Welcome, Dr. Sharma, to Akashvani Studios.
Thank you.
Dr. Sab, GDP grew by 8.2% in financial year 24, and we see a growth of over 7% for the third consecutive year. So we are starting with the very good news.
Yes, we are starting with the very good news, and the economy is now significantly resilient and on a strong wicket and stable footing, demonstrating resilience in the face of geopolitical developments. So economic fundamentals are very, very supportive as we grow by 9.7% in 21-22, thereafter 7.3 in 22-23, and now 8.2% in 23-24. So average growth rate is more than 8% in the post-pandemic years. That is a great thing which has happened because the whole world is impacted by the many factors like the geopolitical developments, high inflation, high interest rates. But India's economy is showing significant resilience as we are mitigating the impact of headwinds and we are growing in a great numbers and great growth trajectory.
Yes, probably in one word, if you were to describe, we would say that the economy is resilient. And you have also used this word. We have been largely unaffected by the geopolitical situation like the Ukraine-Russia war. But on the domestic front, we've had a string of reforms like the GST. And what do you think the role of the various reforms has been on the strengthening of the economic situation in the country, despite the other not so favorable external factors?
Yes, our plethora of reforms, as you rightly said, the sting of reforms is very, very supportive. As we started our journey from Make in India, thereafter there were a lot of reforms in these of doing business, Startup India, Stand Up India, and then the Atmanirbhar Bharat. And during the COVID era also, we were making so many reforms like the PLI scheme and various reforms for the downtrodden, like the reforms for the poorer and the migrant workers. So the plethora of reforms is now becoming visible as the economy is growing in a good number, as supported by reforms and also supported by efforts of the industry and the calibrated steps undertaken by the government and the Reserve Bank of India. Because we were impacted by the high inflation trajectory immediately after the coronavirus. And before we recovered from corona, we were impacted by the geopolitical headwinds like the Russia-Ukraine war, thereafter Israel-Gaza war, and which is still going on. So all these developments and all these like the negative developments in the global economy were mitigated by the adequate reforms at the domestic level. So now the impact of reforms is becoming visible as our growth is very, very intact and our fundamentals like the various macroeconomic indicators, whether the exports or the IIP numbers or infrastructure, all these are in a good momentum and supporting the economy like anything. So going forward, we have bright expectations from our economy as we are moving towards Viksit Bharat, and the latest survey by the government of India is depicting a bright picture as survey is saying that we are on a strong wicket and stable footing to move forward and to become more and more strong in the global market arena. So inflation trajectory is also becoming benign as supply chains are improving and calibrated steps by Reserve Bank of India are becoming visible, and we are successful to control inflation as inflation is now stabilizing less than 5% on an average at around 5%, which is a great thing which has happened because many economies are still facing the impact of high inflation. But India, despite the inflation, high inflation and despite the high interest rates, is growing in a great number.
India's current account deficit for the last financial year stood at 0.7% of the GDP during financial year 24, an improvement from the deficit of 2.0% of the GDP in financial year 23. How do you view that? And what do you think are the reasons that have led to this nice situation?
This is a very robust number, and our economic policy, like particularly our external trade policy is very, very intact, and our new foreign trade policy is very robust. As our exports are becoming visible and we are posting the higher numbers, and we posted in 22-23, we posted the significant historic number in exports at USD $776 billion. And for the current year also, there is uptick on that high number. Despite the headwinds, despite the troubles in sea, our external economy remained intact, and Not only the exports, but also in the FDI trajectory, we attracted a large chunk of foreign direct investments during the post-COVID years. So all these developments are supporting the economy in the balance of payments, and trade deficit is also improving, and overall balance of payments are also improving. So that's why our current account deficit is becoming supportive, and that is significantly lower as compared with the last many years.
You mentioned FDI. FDI has slowed a bit this time, but we have extremely good foreign forex reserves. Do you see a bit of dichotomy there, and how is that?
I should not say that the level of FDI is slowing down. That is the momentarily impact of the geopolitical developments like the Russia-Ukraine war and other geopolitical developments. But we are very, very intact and steady in the FDI inflows, as we posted the highest number in 21-22 at $83 billion. Thereafter, there was some correction because of the global headwinds. But our fundamental and our lucrativeness towards the foreign investors remains intact. And going forward, we are expecting that shortly we will become a $100 billion FDI destination in the next very few years, because in the current financial year, we will become a $4 trillion economy. And in 26-27, we will be a $5 trillion economy. And by 2030, we will be a $7 trillion economy. So all these developments will attract the minds of the global investors, and India will remain lucrative in the global charts. So as you said, that forex reserves are high, all-time high, but the FDI a little bit slowed. The FDI slowed, but the forex reserves are high because of the lucrativeness of our stock markets. The investors are coming, the FIIs are coming, they are investing in the Indian stocks, and that's why markets are going up and up. Because the fundamentals like the corporate profits are very, very intact in India, and going forward these will continue, and the economy will remain on the high road and will attract more and more chunks of the investments from the foreign markets, and our forex reserves will be very, very supportive and strong in the coming times too.
When you talk about the stock markets, Dr. Sharma, if Sensex is a barometer of the economy, of any economy for that matter, at 80,000 plus, it's fantastic figure. And we also see that record has been made. For example, now we have unprecedented number of demat accounts opened by the citizens of the country. Does that reflect the confidence of the common citizen in the Indian economy?
Yes, because earlier our markets were dependent on the FII inflows, and markets were driven by the foreign investors. But now the retail participation, particularly after the crisis of 2020, the retail participation has significantly increased. So the retailers are becoming a great growth driver of the Indian stock market, as more than 45% transactions in the stock market are by the retail investors. So they are supporting the market. So the FIIs now are not able to influence that much the stock market scenario, because our fundamentals are strong. That's why the retail participation is becoming more and more robust in the recent years. So going forward, I think that will continue as the trust of our investors on our stock markets is becoming strong, and our corporate, our fundamentals, our economy, our economic trajectory, all these are supportive of the movement in the stock markets, and we have already crossed the market capitalization of $5 trillion recently.
Talking about the banking sector, that's one sector which has also been strengthened. 10 years ago, we had huge NPAs. Today, they are hugely reduced. Again, do you see the role of the government, especially the RBI and the finance ministry, in strengthening the banking sector?
Yes, because banking sector is always the backbone of the economy. If the banking sector is weak and economy is strong, that is also not in favor of overall economic growth trajectory of the country. But in India, the both are very, very strong. Our economy is moving in significant growth trajectory, and banking sector is also very, very supportive and resilient. Despite so many crises during the last 10-15 years, starting from the Lehman crisis, thereafter the US and China trade war, thereafter coronavirus, thereafter the geopolitical developments. One after one, the world economy was impacted by such kind of crises. But now the banking sector during the last 15 years has proven very, very resilient and significant to move forward and to support the economy in every crisis. So we are proud of our banking sector that with the reforms and with the calibrated steps of Reserve Bank of India and support of the government, the banking sector has become significantly resilient, and now the world is trusting on India's banking system.
Dr. Sharma, another factor in any economy is inflation, because that can in a way wipe out all the positives. But we see that the Reserve Bank of India has worked very hard and has taken measures all along to maintain retail inflation at 5.4%, the lowest level since the pandemic, driven by a fall in core inflation, both goods and services. How do you view this?
That was a difficult situation because of various developments at the global level, global headwinds, that high interest rates and high commodity prices and high inflation trajectory in the wholesale market, like the WPI inflation was at around 16-17%. But despite all these headwinds and negative effects, our RBI was able to reduce the inflation significantly from its peak of 7.7 or 7.8% in the month of May, June 2022. Now the inflation trajectory, as you rightly said, that has come down significantly from its peak. Though there are challenges because of the food inflation, because food inflation remains still high, we have to address the trajectory of food inflation, like supply chain in the food market and more agri infrastructure for the promotion of food processing industry, so that prices of the food items are not escalated during the shortfalls or the little shortfalls. Prices are not reflected in a significant high price trajectory. So government is doing a lot to improve the supply chain, and they have already improved a lot because now the inflation is coming down. So going forward, I think we will be able to control inflation, and inflation will be in the benign trajectory of at around somewhere between 4 to 4.5% in the coming times, and that will be a great success of the India's policymakers and the efforts of the Reserve Bank of India and the government.
Another interesting aspect of the economic survey was the recognition of bottom-up reform. And the survey said the growth strategy for Amrit Kaal is dependent on 6 key areas: private investment, MSMEs, agriculture, education employment gap, and focus on state capacity building. Briefly, how would you comment on this, Dr. Sharma?
Yes, that is very important. Actually, private capital formation should also become robust because government is spending a lot in the public infrastructure, and government capital spending is significantly high. That has increased from 3-4 lakh crore to 11 lakh crore in the interim budget. So going forward, the private sector should also come forward, as a private capital formation is needed in the economy to expand more and to create employment opportunities. But I would say that firstly, demand should be more and more strong, so that private sector is able to expand capacities and deploy more and more workforce in their respective premises. Then the public-private partnership for green transition is also very important, as we have our targets of net zero. So we should move forward with this partnership to tackle the global warming and the negative impact on the agriculture sector and other many sectors and inflation. So MSME support is also very, very important because MSMEs are our growth driver. So contribution of MSMEs is very, very strong, as they contribute at around 30-31% in GDP and more than 40% in manufacturing and exports. So our MSMEs should be supported and provided a great handholding to move forward. Then the sustainable agriculture is also important, as we have to address the inflation trajectory and to become more and more sustainable in the coming times. So targeted education and skill policies are also needed, because there should not be any skill deficit in the country, as we are in the need of skilled manpower. The enhancing state capacity for sustainable progress is also important, because we have to increase the capacities to move forward and to become more and more strong at the state level, so that capacities are built and we are able to generate our volumes and to participate more and more in the production processes.
Well, with this reflection on the economic survey, we reflected upon the pluses and minuses of the year gone by as far as our financial health is concerned, the financial health of our country is concerned. So we hope that this will form a strong basis for the road ahead for the budget, which will be coming tomorrow. And we are all waiting with bated breath to see as to what would be there in the budget tomorrow. Thank you, Dr. Sharma, for being with us.
Thank you.
You were listening to a discussion on Economic Survey 2023-24. The participants were SP Sharma, Economic Analyst, and Lalima Aneja Dang, Anchor. This program was produced and presented by the News Services Division of Akashvani. You can listen to it on our mobile app, News on AIR. This program is also available on our YouTube channel, News on AIR Official. You may share your feedback about this program through email at airnsdtalks@gmail.com or WhatsApp on 9289094044.